I'm relaxed right now. I got shorts on and everything.
I got shorts too, man. Yeah, what is that, a Hugo Boss shirt?
Is it not cool or what? Hey, good to be back. We're getting close to the end of summer here. Today we want to focus on our little sandbox, which is Canadian venture capital, and specifically the TSX Venture.
Just looking at the composite, it's impossible to overstate how bad the drop in liquidity has been. Today will be the 5th trading day in a row below 20 million total shares traded on the composite.
The TSX Venture composite.
The TSX Venture composite. You have to go back to 2015 to find a day below 20 million shares traded total. So it's just totally unprecedented. Even in August, even in a seasonally weak period like we're in, it's completely unprecedented, these low volumes. You're always seeing 50, 60, 70 million shares traded. Even in, the summer doldrums, you're having days like that where now, we don't get above 30 million. I think we've had a few days. Looking back to July 1st, we've only seen 4 days where the volume was above 30 million total shares on the TSX Venture composite. Only 4 days.
Yeah, I mean, it's definitely historic, and this has definitely been the summer of no bid, as we said it was going to be a couple months ago. People are kind of taking the wait and see approach, which is to say, basically, I'm done selling for now. Mm-hmm. I want to see what happens after Labor Day. And I think those first kind of 5-10 trading days for the TSX Venture after Labor Day will probably tell the tale from then until tax loss selling season at the end of November.
Look no further than the real estate market. This is happening across the board. It's not just the venture. Liquidity is drying up everywhere you look with higher interest rates. The Canadian Real Estate Association came out today. They said that there's the average house price declined by $27,000 in the month of July, and now the average home value nationwide is down $355,000 from peak valuations.
Obviously, when the value of people's homes go down, and we not to toot our horn, but we did talk about this. As interest rates rise, disposable income drops, and when disposable income drops, participation in speculative high risk markets like the venture from the retail investor disappears. Yeah. They can't afford to take those risks on stocks that can either, potentially go to the moon or oftentimes go to near zero if they fail, right? So it's definitely, I think the real estate market is very, very closely, at least in Canada, is very, very closely tied to our venture markets and the performance of our venture markets and participation rates. Because right now, the retail investor, they've said goodbye to the venture months ago.
The wealth effect of real estate in Canada is like nowhere on earth.
Yeah.
And everyone was feeling great, in 2020 and 2021. Even though it was all paper gains, the mentality, what that does to the psyche when you're speculating on an exchange like the venture, massive difference. We're seeing it.
What was interesting from like 2017 till probably the beginning of 2022 is I would go to Vancouver. Everybody talks about real estate. Everybody's a real estate speculator there. Even the financiers who basically help keep the venture churning and new opportunities coming out and who do quite well financing these startups, they're talking about real estate when you go to meetings with them. To accommodate the tough market environment, I think astutely the people who run the venture lowered the minimum financing requirement for some of these companies that are struggling to raise capital. So just reading, I'll read it off, just the first paragraph. We'll include a link to the full article in our description. But effective June 23rd, this is from Clark Wilson, actually our legal firm, the TSX Venture Exchange has amended some of the minimum pricing requirements in its corporate finance manual to incorporate on a permanent basis relief from minimum pricing requirements previously available on a temporary basis. Prior to this amendment, and in the absence of the temporary relief, listed shares in an exchange-listed company were subject to a minimum sale price of 5 cents, meaning you can't do a financing below 5 cents. The temporary relief allowed an issuer to sell listed shares with a market price of less than 5 cents at the market price, subject to a minimum price of 1 cent. So basically, and again, we'll include it, you can read the full article, but basically what they're saying is if there's a company struggling, trading well below or trading below 5 cents, they can now finance a deal as low as a penny. So if that's not a sign of the times, I don't know what is.
Even go back to 2008, August 2008, before the big crash. The venture's trading 50, 70 million shares a day, but it's at 2,000. The composite's at 2,000. Today we're at 640. I mean, look, even the heyday, 2010, 2011, it's trading 200 million plus shares a day in total. We've lost 95% of the volume. We're trading 15 million, 16 million shares a day on the composite.
It's crazy.
Down from 200, down from 100. I mean, even look back 6 months, we're down 85% the volume.
It's nuts.
Stunning.
And I think that directly will correlate. If you took, okay, so Q1 2021 was probably the most euphoric time for TSX Venture stocks, maybe ever. Yeah. And so if you plucked out 10 retail investors who were actively participating in that market in Q1 2021, you sat in a room with them today and you said, hey, how many venture stocks have you bought in the last 3-4 months? 9 out of 10 probably say not one. Yeah.
0. Donut. Yeah. And this is where I think it's going. You go back to 2010, you see the volume. It's like there's 100 people trading stocks in a room. Today, there's 5 people trading stocks in the room. But I think the big difference is the millennials took part in the last run, specifically in the last 2-3 years, the crypto cannabis kind of enthused run. The millennials were in there. They have taken their ball and gone home.
Yeah.
I think the younger generation that got hit in this last crash, they are done. They're not even looking at stocks. It's like passe. They've moved on to something else.
Yeah.
And we're kind of back like where we were prior, to this run.
And
the last 3-4 years.
And I'm painting with a broad brush here, but the older generation, let's say the boomer generation, really loved natural resource plays. They love mining stocks. And yeah. I think they were, a decade ago during that great run, 2010, 2011, they were kind of they were the catalyst for liquidity, is the boomer generation who appreciates natural resource development, likes to speculate on attractive deposits that maybe one day they'll go into production. If you just look at the demographics in North America now, for every 2 people who are turning 65 this year, we have 1 person turning 20. So as the boomers get to that fixed income kind of life where they're no longer working, the TSX Venture is the last place they should be looking to invest. It's too risky. They're on a fixed income, and a fixed income in a highly inflationary environment, you don't have room to take risks. And I think there's a few issues that are impacting the venture, and I think that is kind of one of the sidebar issues, but it's still significant.
Well said. I think that's hugely significant. The window for the exchange to be ignited is getting smaller and smaller. The next couple of weeks are going to be very fascinating.
They are. I would even say the next couple of days. So, so everybody, the Canadian banking institutions are like, they're like what Canada hangs its economic hat on. Since the days of Confederation, we've had a banking system that prides itself on conservatism and safety and just all around just efficient operations. So Bloomberg just came out today saying that it's expected that the banks will report their first decrease in profits in roughly 2 years since COVID kicked off. Yeah. That's a big deal. But why? It's being implied that they're doing it to prepare for potential loan losses, and they are stocking their reserves. So the next couple days will be big. If the Canadian banks show any weakness, this country prides itself on its banks. I mean, you can basically write the venture market off for a quarter. Nothing's really going to happen until this issue either crystallizes that yes, there is a problem and the banks are worried, or actually it's not that big of a deal. So the next couple of days could be very telling for the overall sentiment for, I think, Q4. All right, I think that about wraps it up. Don't forget to like and subscribe. And also, if you want some more detailed breakdowns of technology opportunities, what's going on in the commodity world, highly recommend you sign up for our weekly email newsletter. You can do so at pinnacledigest.com. Thanks for listening.
See you next time.